So guys, I'm curious, are personal loans going to end up being what turns this recession into the next depression? I'm always asking myself, what is going to be the catalyst for another popping of this current financial bubble that could cause millions of us Americans to file for bankruptcy and bring the economy down even more? Guys, hello again, Matthew here, your cash flow coach. Welcome back to the VIP Financial Ed YouTube channel. Today I'm here to discuss the rapid increase in personal loans and how the industry as a whole has been preying on the desperate with high interest rates that even compare to the payday loan industry. Today I want to share with you how this might cause our current recession to turn into a depression and exactly what you can do about it to avoid becoming just another FinTech casualty. Personal loans. They've become the fastest growing segment of the consumer debt market with double-digit growth rates over the last 4 years consecutively, and 2020 is poised to be the largest growth rate due to the pandemic. And it's obvious, guys, why people are turning to these personal loans. It's the ability to consolidate, say, even higher interest rate credit card debts, or say to survive in these times as job and industry loss is becoming almost commonplace. By the end of 2019, an unprecedented 20.8 million Americans owed money on at least one personal loan, and more than 1/3 of which came from a FinTech company. I can pretty much guarantee you guys that number is going to be going up dramatically once 2020 shakes out and all is said and done. Over the last 10 years, as banks have adopted this tighter loan approval process, it's led to this explosion of these financial technology companies who make it easier than ever to conduct financial transactions even from a mobile device. And I'm sure that you've heard of them or you used some of them before. Companies like PayPal, Venmo, Apple Pay, and even the popular stock trading site Robinhood. There are many other companies out there who are making it just as easy to take out personal loans to those with superb credit. You can do it all with just a few clicks of a button. Before I get too far in, I do want to make it clear. I advocate, and I even teach here on the channel how to use these and other types of debt weapons in a safe and efficient manner. Being reckless with your debt is your number one ticket to financial ruin, not freedom. So I just wanted to make sure I got that off my chest. I didn't want to give anybody the wrong impression if you happen to be new to the channel. Now, some of these FinTech lending companies you've, I'm sure, heard of. Companies like Avant, Prosper, Sophie, Affirm, there are many others. They target us all the time. Leave a comment. I'm curious. Have you guys had any experience with any of these credit lending FinTech companies? What was that like? Let us know below, and I'll share my experiences too. Now, I am an advocate of having liquid capital on hand with reasonable interest rates and no annual fees. But I'm seeing how these FinTech companies are not only driving the rise of personal loans, but they could also be the economic storm along with the coronavirus that pushes this already fragile economy into a depression. According to an online article posted by The Intercept called The FinTech Debt Trap, Americans had racked up nearly $4.2 trillion in consumer debts, not including mortgages. And not only was this a record amount, but what was more surprising to me was that the greatest contributor to that surge wasn't credit cards, it wasn't student loans, it wasn't auto debts, but you guessed it, it was these high-interest personal loans. With the current administration's banking officials looking to deregulate the industry, this could lead to a financial collapse for consumers from these already aggressive FinTech lending companies that capitalize on desperation. The current regulations already allow some of these FinTech companies to charge anywhere from 25%, 30% or more every year, while others can charge annual interest rates between 160 to 299%, which is payday lending territory. Now, with some consumer protection in place and a cap on the interest rates, any deregulation in the industry could take all of these protections away from us consumers, and it'll leave customers drowning in a continuous rising ocean of debt. Do these companies sound very customer friendly to you? This is where a lot of the problem lies, is they offer their help by welcoming low to no credit scores at all, the ease of just a few clicks of the button for approval, and fast deposits of the loan into your account. Their quest to sign up new borrowers reminds me of the subprime mortgage lending debacle back in 2008. And we all know what happened from those predatory practices, right?
We should be honest here. We have no income flow. No incoming income flow. We have plenty of outgoing income.
No savings, no credit.
I'm in the real estate business. It's 2006. That's all good enough for me. We're going to put you in a ninja loan. No income, no jobs, no assets, and you don't have to pay a penny for 2 years.
It's almost like we're heading down the same path except with a different industry. Leave a comment, guys. Do you think it's going to be the mortgage industry that causes the problem? Is it going to be this personal loan industry, or maybe even the auto loan industry, which is another mess? Now, if you've been in the VIP Financial Ed community for a while, or you're brand new to the channel, my premise has always been to teach you how to use debt to create wealth, how to turn debt into wealth. And I've done that myself, and I show you how I practice it. But the more I research these fintech companies, the more I see the need to really do your homework if this is a path that you must take. So here are the 3 tips to help you if you are unfortunately right now in this situation. Number 1, make sure that you shop around. You've got to explore all the options that are available to you when you're searching for the best loans, because it can narrow down what is worth applying for to meet your financial objectives. For my research, in 2019, Bankrate put the average interest rate for these personal loans at 11%. So don't fall into one of those high interest traps that I was mentioning earlier. The second tip here is to make sure that you check repayment terms and conditions very carefully. And yes, I actually do recommend reading the entire repayment terms and conditions, including if there are any early repayment charges. It's so important that you know what you're getting yourself into before signing the dotted line, as they say. You really got to make sure that the interest rate is fixed with no opportunity to increase. Again, prepayment penalties within the term of the loan, etc. The third tip is make sure that you have a strategy for the loan. I don't recommend taking out any of these loans just for liquidity purposes. You've really got to make sure that you have a plan for it, since there are other debt weapons that might be more suited to your financial goals, especially if liquidity is one of them. So I hope these starting tips help you as you're researching personal loans. They are very concerning for not only the consumers that are using them, but my question also is, what about the companies that are loaning the money out if they aren't paid back? What is going to be the long-term economic effects on the other side? Of course, this is a video for another time, as I'll be keeping close tabs on this. Lastly, guys, if you want me to do more videos about these topics or others, any other topic at all, just press the like button or leave a comment below. Folks, until we see you next time, make it a great day and keep on cash flowing. Take care.